Leading lithium companies on the ASX are up between 25 and 49% over the last month. This has been one of the best performing thematics over the last year, and we're going to zero in and have a look at the best performers over the month, as well as their correlations against themselves and their peers against the whole lithium spectrum on the ASX. This is Final Market Points, where we connect the leading market themes and the top performing companies for better trading. You can like the video to support the channel, click subscribe for updates, or comment below to let us know which lithium miners you're trading. Now, having a look, we're going to have a look at the top 6 performers over the last month. They're going to be on the right hand side in that table. We're also going to have a look at their charts, and we're going to have a look at their correlations to really get an understanding of how and why we can trade these. When one starts breaking out, it can be the catalyst for the next few to run on after that. We looked at this one that happened earlier in the year, where Liontown Resources was the first one out of the gate, and that led to about 2 or 3 months worth of lithium companies continuing to run and break out further, higher, further, and stronger. You can click on the link on the screen to see and understand more of that video, where we work through chart by chart as they broke out one by one. Now, what we have on the left-hand side is the old Oracle and Galaxy Lithium that's come together. That's now Allkem Limited AKE, and they've put on 12.48% for the month. You can see most of that rally really happened in the last couple of days of trading in 2021, and that really does correlate somewhat with, if we're going to have a look at the parallel of the commodity itself, you can see where we've had a sideways consolidation for the commodity of lithium itself and then a recent breakout. It does somewhat correlate to what Allkem has been showing over the last couple of weeks, month, and this year. But we're going to jump in now and have a look at the top 6. So looking at the performances coming in from number 6, we've got Galan, GLN is a ticker. They put on 25%. We can see a similar sort of move. They had that sideways churn between July, August, September, October. While volatile, it did break out of that base and then move from that 120 region up towards $2 where it is today. Now, it has been one of the stronger leaders, and we'll have a look at the correlations of this one, because when we see GLN on the correlations, which we'll bring up here, so we've got GLN's performances as number 6, 25% for the month, 165% for the year. When we have a look at that year, we're going to have a look at the performances and correlations to see that it has been running very high with PLS. And then also what we've highlighted here is a box of high trading shares that we do. We consistently look at these ones for the lithium leaders on the ASX. So we've got 2 boxes here of high correlation. These are a lot of the companies that we consistently trade for lithium, but we're focusing on the top 6 today to see how those correlations pan out. PLS 0.944, so very high correlations that we've seen with GLN, and it has been a very strong leader over that same time frame, a favored trading lithium company on the ASX. Moving on up, we've got PLS as that next one. 26% over the month. For the year, we're looking at 130%. Similar sort of movement. We're seeing this high correlation where a lot of them are breaking out towards the late end of this year, of 2021 and the last part of December. We do see that moving, and that's where we're seeing these best performers come from. But you're noticing that same sort of chart, and that's what we really have this consolidation here. We're looking at a VCP with a breakout here in May. This is one we looked at around the Liontown Resources before that really kicked in to come from around the 120 region to come on and climb up for about 100% return. So when we really have a look, this is a massive move from the share price itself, floating around that 120 in the congestion for the VCP before breaking out with a pocket pivot. You can click on the link in the description below to understand more about pocket pivots, because that is a very useful trading strategy for looking at the timing of these breakouts. And we talk about VCPs, again, you can click on the link there because we've drilled down on this in great detail. VCPs and how to trade them, what to look for and how to filter for them. But when we see VCPs and pocket pivots come together, that's a great timing schedule. And it has shown here 120 to 240, good strong movement from PLS. Again, had that sideways congestion, didn't quite get over this overhead resistance, really toyed with it. First contraction, second's bigger, and then whether this is a tight cup and handle, and you look at that yourself, that's up to you to really determine whether it is a cup and handle, but it did break out, higher volatility, and off it goes, 240, 330, that's where it's moved to. Move on up, GWR. We're seeing this 28% over the last month, a lower capitalized company and hasn't had the same sort of performances over the year. We do know that GWR are also focused on iron ore because their secondary projects much further down their priority list does include lithium. Their main focus is iron ore, and their year performance is significantly different to the others, but a 28% return over the last month. You will note the correlations are not as high as what we do see for GWR. This is very red in the column. That's because most of it's really coming from the iron ore side of things. While they are exposed to the lithium commodity, nowhere near as much from the balance sheet and the exposure of how they deploy their capital for the expansion. Next, we see CUF. So we're going to have a look at CUF's performance. 34% over the month, 15% over the week. And we're going to see the correlations as well. CUF working with GWR, but again, not the strongest correlations with a lot of the other top ranked companies throughout that period. That then we're going to have a look at the chart to really see and understand how and why. Because when we look at GWR, we'll see that lower capitalized company as well, it's trading under 16 cents. It has that lower correlation. So not one of our favored trading shares for CUF, but it is one of the better performers as well, 34% over the last GWR, 28%, and then we're going to move up to CWF to have a look at them. Their performance is similar. So that share price is under, at its highs, still under 12 cents, coming around 4 cents. This is what we highlight as one of those high velocity companies, which is something that we surface on the weekends, Fridays and Saturdays, and showing that it has been rounding out a bottom. While that's a critical one, and it does have a correlation towards the lithium companies because they're exposed to it, that correlation of CUF is low. So we're not expecting, when we see the bulk of these lithium miners that we're highlighting here, the bulk of these leading lithium miners that have put on the likes of 100 odd 200% in the last year, not expecting that to be the breakout catalyst for something like CUF. So straight away we look at this list and decide that this is not going to be one of our trading shares that we pick up. However, the top two have good strong correlations throughout the group, definitely the best one. So we're going to move on up there now. GT1, we see these correlations are fairly strong. This is the second best performing lithium company on the ASX this month, just shy of 44%. Recent listing, we can tell because the quarterly and yearly performances don't show up at all because their data doesn't go back that far. We're going to have a look at the chart now for GT1. Bring that up to the left-hand side, drag it over for green technology. And if we zero out, we do see that it has been on the boards for 12 months, but the rankings aren't showing. And we'll have a look at this performance. This is still CUF. Iris isn't letting us drag it across. There we go. There's a recent listing. So that breakout rally, that good strong rally we've seen in the last couple of days, that we've seen both AKE, PLS and Galan Lithium, the leading lithium miners that we use on the ASX, there's good strong correlations here. So if we were to narrow those correlations into the last month or two since it's been listed, we would find a better performing correlations for GT1. Green technology, 43% over the last month. That recent listing has got them in there, and we'll see over time whether they really do come to join into this group and have good strong green movements with the other leading lithium miners on the ASX. That's GT1. GL1 becomes our top performer. So we've got 94% over the quarter, 49% for the month. Global Lithium, here's where we want to see these correlations. Now note, these are the best correlations that we can see on the table for all of them listed on the ASX. We've got another pocket here of some good strong performers as well. But for the leading one, we're going to see a lot of strong, so the green shows the highest correlations. One is obviously correlation with itself. But when we get north of 85, preferably 90, we're seeing better correlations. This is where we can see, like we saw with Liontown, when one starts breaking, the other ones start to follow suit. And that's really what this list shows here. When we see them moving, they start to move together. They become the canaries in the coal mines for each other's catalyst, makes them much easier to trade, which is why we're consistently servicing them in shares in play and final market points, because we're connecting those leading themes with the top performing companies. Having a look at the chart now, so that 49% return for the month, 94% for the quarter. GL1, when we get this to the left-hand side, you see the listed back in April and May. Now this is around the time when we saw Liontown break out and start to move. This can be a VCP. If we're going to zero in and have a look at the performances in this range, we'll see the first contraction after IPO, second contraction, both coming with a base of about 24 cents. The third contraction doesn't come as high, 27, 28 cents, and contracts and maintains a higher low. but really gets these tighter closes here and very low volume changing hands. Then we see a pocket pivot. So remember, from a Gil Morales and Chris Kacher perspective, we've got a good strong candle coming off the 50-day and the 10-day moving average, which are the 50 days the green line, 10 days the blue line, breaking out and then starting to move. Do see another jump in volume supportive, but then gets pulled back, heavy volume selling back into it. Tight closes again. We've got 2 inside days, not quite 4, which is ideal from a Wyckoff perspective, or from David Weiss's interpretation of Wyckoff. Sits on a higher low. That is very positive. Higher low, coming out of a VCP from a Mark Minervini perspective. Obviously not a profitable company with its early stage lithium deposits, but we see this breakout on good strong volume. That's supportive of the move. And then in the pullbacks, what we're seeing, the pullback down here, the volume starts to drift off and wane. We're not seeing heavy selling, utilizing the opportunity up near the higher prices. The selling volumes are not dumping heavily. And then as we see it round out higher lows again, so a low and another higher low, 3 consecutive higher lows, and then breaks out with good strong volume before it gets going again. That helps with the breakout, and then breakouts again, and another breakout with good volume. The volume's drifting, the share price is getting higher, the value of these trades are getting smaller. We've come from 50 cents, getting up towards $1. That's the best performer over the last month. We see these bases sideways churn for a couple of months, sideways churn a couple of months, and sideways churn. These are the highs that is sitting on top of the previous congestions. Highs sitting on this whole congestion is sitting on top of the previous highs. This is the definition of an uptrend, and it's continuing at the moment. GL1 is the best performer, 49% over the last month. And the correlations that we really want to see, because this is where we come back to see, is it going to fit into this leading group of lithium companies? It may well be one of the ones that takes charge and starts to lead this group and have high correlations, because there is great interest in the company. We're still seeing the volumes pour in as the market climbs, and it's all very positive for this lithium side. And recent movements, we did see the lithium price breakout, drag that over the left-hand side. There we go. You can see the recent movements throughout December and early parts of this year. We've also got ACDC, which looks at the lithium companies as well as all the battery minerals. We're not seeing a huge amount of strength in that. You can see it's been drifting down recently. International, we've got FX plays in here as well, but it's not a pure lithium trader. So we do see not a pure lithium trade. AKE does show us more of that, reflects more of the lithium price, and so does our leader GL1. Does show that pricing. That's what we really want to be consistently servicing. So we use this charts, the understanding, the ranking of performances. We have a look at the correlations to surface which companies we want to trade. We're just looking at the top 6 today because it's shares in play, but the other reports that we generate do show the correlations and then highlight which ones and how and when we're trading them from a breakout of VCP, volatility contraction, high tight flags, and the like. If you want more of this, click subscribe, tick the bell so you get alerted from when the updates come through, and comment below to let us know which lithium companies you're trading.